What is up, everybody? We are live and in the house on the Dennis Who Invest Facebook group once more for another exciting live and in the house Q&A. And on that topic, well, what I want everybody to do this evening, as I invite everybody to do every evening that we have a live Q&A, is go ahead and throw any questions in the chat. Say hello. If you're watching this on replay, put replay in the chat so no many people got on replay. If you're here and in the house tonight, this Tuesday evening, feel free to throw going in the comment section so we got a really good feel for how many people are here with us. There'll be opportunities to ask questions as time goes on. We haven't actually ever done a Facebook Live on Bitcoin and crypto, so this is going to be the very first one, the premiere, so to speak, tonight. And avid fans of the podcast may remember Mr. Neel Saund from way back in the last crypto bull run, way back in the day. I want to say way back in the day, I mean 2020/2021. So maybe not that long ago, but Bitcoin's got a bit of a theme to it where this happens every 4 years or so, doesn't it, Neel? The Bitcoin bull market, but more on that in just a minute. Anyway, Neel, how are you?
I'm good, thanks, mate. Yeah, thanks very much for having me on.
Dude, total pleasure. It's been way too long. And you know what? I'm looking forward to more crypto content, man, because crypto's here to stay, if you ask me. But of course, my philosophy in crypto is don't go all in. Don't spend too much time on Twitter and be like the flipping moon boys and all of that crazy stuff. If you're gonna have it as part of a balanced portfolio. At least that's my thesis. Anyway, as I say, we're going to get into all that juicy stuff about crypto. Once again, I'm going to invite everybody in the audience to throw their comments in the comment section. Ask us any question you like about the world of crypto. Really great opportunity to avail of the knowledge that is on offer this evening on this live Q&A. Before we do that, Neel, it'd be lovely if we could have a little bit of an intro for yourself for those on the Dennis Who Invest audience who are yet to meet you, my friend.
Of course, mate. No, of course. Yeah, no, great to be here again. Thanks so much for having me on, James. It's an absolute pleasure. Got involved for the first time in 2013 in crypto, quite early. Caught the bug very early, in fact, 2013. It's wow, over a decade now, 11 years. Originally just heard of it on the grapevine. I was on Reddit, saw someone posting about Bitcoin, and then fell with a pretty dramatic fashion down the rabbit hole and hit every possible obstacle in my way, as most do when they start their journey, I guess, down this incredibly deep rabbit hole.
Every crypto investor has got at least 2 or 3 stories where they just messed up massively. It's
Oh, yeah.
almost like it's a rite of passage for you to
It
actually
is.
achieve some success in the space.
Yeah. I mean, everyone's got their battle wounds. If you've been here for more than a full cycle, which, as James mentioned, is it oscillates around the Bitcoin halving. Most people have heard that phrase by now. The Bitcoin halving. It's a programmatic halving of the output of supply every 4 years, and each cycle oscillates around those 4-year halving cycles. So if you've been here for more than one halving cycle, which is 4 years, yeah, you probably got some war wounds to show, a couple black eyes, bloody nose, but you're still here, you're fighting, and yeah, you're in the trenches with us.
Well, you know what? Those crypto fans, they just keep coming back for more, bro. You know, we're still here. We're still here, right?
Can't
So
get enough.
yeah, there must be something to it, right? There must be something to it. But anyway, listen, the audience know about my opinion on loads of things because I am on the platform and I speak about it. I share my opinions and what have you. And that's why I'm always super keen that whenever we get a guest on, that they do the majority of the talking so we can hear their slant and perspective. I should mention, guys, to anybody who's watching, Neel has got his camera off this evening, and the reason for that is because he's having a bad hair day. No, I'm kidding. He's actually currently living in a house which is under construction, and yeah, it's not pretty in there. It's not pretty in there. So Neel's got his camera off. But anyway, listen, Neel, I think
James said bad hair day. It's actually the makeup today, mate.
I see. I see. Okay. Thanks for clarifying. Wonderful. All right. Well, Neel, you know what? I think probably the majority of people listening to this will be, from what I could see, there were people who are newish to the crypto world. So let's keep a super high level. What the hell
For
is the
sure.
bull market? What the heck actually is that? Because for a lot of people, they don't even know. They've yet to maybe have the opportunity to understand that.
For sure. Yeah, no, so again, super high level. So a bull market naturally is where price on the macro time frame, on the high time frame, is trending upwards. A bear market is the complete opposite and inverse of that. So when price is trending downwards. These market cycles oscillate with 4-year timeframes around this event known as the halving, as I mentioned just now. This halving occurs every 4 years, and the daily issuance of Bitcoin to miners. Miners are used basically to control the network and to secure the network through donating their computing power to the network. This daily issuance basically halves every 4 years. So if you're comparing it to something that we know, that we're comfortable with, the physical equivalent, which is gold, it would be like guaranteeing the fixed supply of gold that's in the Earth's crust, and then every gold mine, every 4 years, having to half the amount they mine, guaranteeing that. So it's a pretty dramatic supply and demand effect on price at the back end. Obviously, where you get the demand forever increasing, really, as people know about it, and as we reach sort of network effects with Metcalfe's law, etc. And naturally, beyond that, you've got supply guaranteed to go down. When I say guaranteed to go down, obviously you've got a fixed supply. The actual supply in circulation isn't going down, but the issuance is. So in terms of supply and demand dynamics, that's what makes it such a compelling asset class to invest in, because we know the amount that's in circulation and we know the amount that's being mined, but we know that demand is also going to be going up as more and more countries now, more and more governments, obviously with the Bitcoin ETF being approved, look to add Bitcoin to their balance sheets as the digital equivalent to the physical or the analog, which is gold.
Thank you for that high level synopsis, Neil. And you know what? One of the coolest things about crypto, here's the thing, nothing is a guarantee in life. One of the biggest guarantees that there is in investing is that there will always be inflation. Like there literally has to be inflation for economies to function. Okay,
Exactly.
there has to be that upward pressure on prices, so people keep buying assets, which is an outcome of inflation. Why that is, that's probably a 30-minute webinar in and of itself.
Really quickly, you could just say it's just because GDPs need to increase, economies need to grow. As we have more populations, as there's more births, etc., there's more people to feed, economies need to grow to basically cover that increased demand, and therefore we need to have an increasing inflationary monetary supply.
There you go. So if you accept that that's going to be a continuing thesis, there will always be more money. And even if demand doesn't increase for crypto and other assets, even if it maintains exactly the same, well, then the value would still increase purely on that basis. Is it the strength necessarily of the asset, or is it the weakness of the cash?
That's
Something to ponder, something to ponder. And what that means, that is probably a 30-minute webinar on it in and of itself. So let's just leave that there. But you know what? Let's go back into what you were saying a second ago, Neil. From the outside looking in, to somebody who maybe kind of has like one eye on the crypto space, or like half an eye on the crypto space, and they kind of sort of hear about it here and there, but they're a little unfamiliar with its intricacies. From their perspective, it looks a little bit like this. There's this crazy bull run, right? And then basically it starts out, no one cares. They're like, it's just a flash in the pan. It starts to grow. Everybody jumps in just at the precise moment that they're left like high and dry. And then the market crashes again for another 3 years, right? And that's like the bull and bust 4-year cycle, the boom and bust 4-year cycle. And to the crypto veterans, they're like, yeah, well, that's just how it works. But to people who are unfamiliar with that, well, what it looks like is it's just continuously in this huge volatile, tumultuous state, and no one's actually really making money, and it's hard to make sense of it all, right, from the outside looking in. So 100%. What is that all about? Why does that happen?
Yeah, sure. So, I mean, with any market, especially markets where there's a fixed supply, of which there aren't many now, cryptos is the main fixed supply market out there. Essentially, an asset, whenever there is a supply shock, needs to be repriced, because the amount in circulation, or the amount currently being released into circulation, doesn't match that of the demand. So what you get basically with these 4-year cycles is, we know that the supply, basically the output of supply, is being halved, but the demand is staying the same or increasing now, as we're seeing. So you need every 4 years to see a repricing of the asset, basically to match that demand that is a known entity, a known quantity. So every 4 years you get this repricing, and then eventually it will get to the point where even the sort of larger players, the venture capital players, the hedge funds, the banks, the institutional larger investors with deep pockets, deem it to be fair value, and deem it to be potentially even overvalued, and then they start selling it and naturally de-risking their books, and then you get this sort of big crash, this big bust, and a bear market. And then again in 4 years' time, you get the halving again, and you get a repricing upwards, as obviously it needs to match that of the increased exponential demand. But I think that the key real psychological light bulb moment for a lot of people is thinking in exponential terms with crypto. A lot of people are conditioned with the stock market and with traditional finance to think in linear terms, because nothing's ever been a guaranteed fixed supply. I mean, a stock can split, or there could be share dilutions at any real time, really, depending on the specific company in question's business plan or what's going on in the wider sort of macro economy. And that means obviously we think in linear terms, but exponential think is really rewarded here in crypto because of these fixed supply dynamics. And I keep saying it, but it's the underpinning thesis for investments in this space is the fixed supply. That is what drives that demand.
And even partly drives the value appreciation of most assets over
Yeah, for
time.
sure. Exactly.
Yeah, this is the thing. That's one of the main theses, right? It's just that with crypto, we've yet to reach, how can we say, peak market saturation as where we have with lots of assets. And what I mean by that is this: there's still newbies, there's still newcomers to the space, so it's still growing in, how can we say, utilization. It's growing in people that are familiar with the space, and it's growing in terms of people that have invested in it. You look at the number of wallets and addresses that there are out there, there's consistently upward trend, and that's actually part of the tailwinds that drive this overall effect. Of course, that's the theory. No one quite knows where any asset is going to go with time. However, one of the guarantees that there is in the world of investing, one of the givens, is that there will always be inflation, and that's one of the things that drives asset value. And we're certainly not saying go all in crypto or any of the crazy stuff. Where what we really like to promote is allowing people to understand how crypto can actually be potentially part of a balanced portfolio where somebody's risk tolerance permits it, and where they're willing to accept the potential downside that may come with that. Because to me, if you've got this asset or this opportunity to accelerate your financial journey, maybe shave 5-10 years off your ability to achieve financial freedom, then to me, having some exposure to it is something that you might reasonably argue. At least that's my philosophy. Again, everybody might not agree with it. If you are going to do it, well, we got to understand it, which is basically what we're here to talk about tonight. So anyway, let's go back to the halvening we were talking about just a second ago, Neel. So the halvening, traditionally the crypto bull market doesn't actually happen until after the halvening. And when we say bull market, how we're going to define it in this instance is Bitcoin reaches a new all-time high. Bitcoin at the minute is like over not right now as we speak, but very recently it was over 70,000. So we saw that new all-time high, but before the halvening this year. What's up with that?
It's basically institutions front running the halving event. They know that fixed supply, and they know that we're going to get a halving of the daily issuance onto the market, onto the live market. So they're front running that. I mean, these institutional investors, they're in what we call in crypto circles, they're what we call diamond hands. So these guys are in it for the long haul. They may not ever sell their Bitcoin, a lot of them. So they're long-term investors, whereas traditionally the average crypto investor has been a more sort of shorter term kind of fair weather investor, whereby you're looking to sort of make a big return and get out where you can, or try and time the top. These deeper pockets, these much larger institutional investors that are now investing, the likes of Fidelity, BlackRock, etc., through the ETF, really they're going to be looking at a decade, 2 decades. That's their time horizon. So they don't care if they get in at 45,000, 55,000, 65,000. They just care about the narrative, and the narrative currently is the halving, and they're front running that known event. So that's why we're seeing this surge in price really ahead of where we should be, sort of around this time frame pre-halving. Generally, what we've seen, segueing back to what you said, James, in terms of price history, what we've seen is an all-time high reached around sort of a month after each halving, and this time we obviously have seen it a month and a half beforehand. The halving is due in a month's time today. So that's really the main reason is just the participant and the level of sophistication and money now in the marketplace.
Okay, I know this is an annoying question. I'm going to ask it anyway. Is now a good time to buy Bitcoin, Neil?
I don't really think it's ever not a good time if you have a mature time horizon. If you look at the stock market or any other investment, especially maybe even property, which I do dabble in as well, you generally enter that investment with a quite sort of mature time frame or time horizon or expectation. You're looking at it for generally between sort of 3 to 10 years. A lot of the time, maybe even more than that. But people seem to have this idea of crypto being a quick sort of short term, almost gamble, really, a bit of a casino. In reality, if you adjust your expectations and time horizon to mimic that of what you would deem a more stable and naturally much less volatile traditional investment, it's never a bad time to buy Bitcoin. The longest, most likely you'll be waiting to make money is 4 years because of this fixed programmatic supply strain that we have. So I would say really, if you're looking at it from a mature time horizon, it's not a bad time ever. If you're looking at it from the perspective of a quick buck, then now's a very, very good time to be looking at it, researching and learning more.
And this is the thing, you know, when you apply traditional investing logic and wisdom, which is to buy and hold your assets in virtually indefinitely until you reach retirement age, so maybe a time frame of 25 or 30 years. If you literally just take that logic, apply it to crypto, forget all the moon boys and all the insanity that goes on in Twitter and everybody talking about how they made 1 million overnight. Well, just as you say, even the people that have done buy and hold from this point forward, from up to this point, hitherto until this point, have actually done really quite well. I mean, apparently, if you take each year that Bitcoin has been in existence and you divide it by its overall appreciation, you've got a rate of appreciation of 250% on average, which is an absolutely crazy amount to compound. Of course, it's not like, let's be rational about this. It's not likely that that's going to continue at that rate. We saw the majority of that appreciation at the beginning, but it still reads very well, right? And as you say, take that logic, apply it to the crypto world. If you simply buy and hold Bitcoin, no one, providing they can just keep their fingers off the sell button, has ever lost money on a 4 year time frame. And that, by the way, that's the very worst case scenario. Most people have made money sooner than that.
No, 100%. And obviously, we don't want to delve into that sort of quagmire of financial advice, etc. But these are just facts.
Yeah.
Just looking at it from the perspective of what has happened historically, what we know probabilistically will happen moving forward, is if you buy the lowest risk asset right now in the market with the lowest volatility, which is Bitcoin, and you hold it with a mature time frame, there's a very good probability you'll make money.
But let's just pour some cold water on that, because we definitely want to be responsible with
For
this
sure.
message. You know, we definitely do. And we also want to throw another disclaimer in there and say, actually, it's maybe not necessarily for everybody, because emotional factors are something that's present as well, and something that are a factor in somebody's investing style. And maybe not everybody out there wants to handle that level of volatility, in which case that's totally cool as well. All we are saying is that should one wish to participate in the space, we're simply reciting facts. And I'm not saying I'm actually even necessarily Bitcoin pro or Bitcoin anti-Bitcoin. I'm kind of like trying to sit in the middle here. All I'm doing is trying to give a balanced representation of what we've observed historically. Some food for thought, you know, because what I actually often find is a lot of people who hate on the crypto space, it's very rare that it comes from an educated perspective. Are you with me? I
For
very
sure,
rare.
yeah.
Yeah, it's more just kind of this sort of I don't know, like a sort of like anger or confused rage, or maybe it's not always the most informed. And I feel that if there was more education on that front, that at least people could decide if it was for them or not from them, from a perspective of education, which is what we're here to talk about tonight.
That's it. It's the volatility as well. I mean, with volatility, you get an oscillation between the two main states of emotion, and that is fear and greed. So it kind of it galvanizes people around one of those two camps at various points in that 4 year cycle. So that's why you get a lot of sort of aggro from people that don't quite understand the asset because they see the volatility. And then on the backside, and then on the flip side of that, you see the headlines about people losing money, the sinister underbelly of the space, simply because they get in without doing their research and without being informed, which is the main thing to do when getting into this marketplace. But also it segues into sizing correctly. If you're an investor and you've got a larger portfolio where you're looking at different asset classes, don't go 100% in crypto. Put an amount in crypto that you deem to be an appropriate amount, which can weather the volatility. If you oversize, then you're going to be emotional. But if you have an appropriate amount in it, then naturally you'll be able to manage those emotions a lot better and make a more informed overall investment portfolio.
DYOR. Okay, cool. How about altcoins this year? What do you think's on the horizon for altcoins? Do you think we're going to see an alt season again, so to
Yeah,
speak? By the way,
we'll
an
see
alt
several. Yeah.
season. Yeah, and just to define alt season for people who are listening, alt season is when the price of the alternative cryptos, as in the cryptos outside of Bitcoin and also possibly Ethereum, depending on how you define it, see this massive volatile upsurge in price. And traditionally, the returns in that little window of time are even more magnificent than the returns on Bitcoin, which is really cool. So do you think that's going to happen this cycle, Neel?
I mean, we've had arguably one already this cycle. I would say the last sort of few months have been somewhat of an alt season. You've had a lot of alts, especially sort of blue chip alts that are sort of a little bit more pioneering, have more utility behind them, outperforming even the performance of Bitcoin, and Bitcoin's still up significantly off the lows of the last few months. Yeah, we'll see other alt seasons. Altcoins will significantly outperform Bitcoin, most likely based on historic data. But again, there's a lot more volatility, so it's not for the faint of heart. They traditionally act as what's known in finance terms as beta to Bitcoin. By beta, obviously, it means they're correlated in the same direction, but they trade with significantly more volatility. And the reason for them being or acting as beta to Bitcoin is simply because of money flows within the crypto ecosystem. So when people make money in Bitcoin, if it's their first investment or first sort of toe dip into the space, they start to move out on the risk curve. They start to want to speculate more and take more risk. They get sort of eyes bigger than their stomach, and they start getting greedy, and they start speculating in the more speculative assets, let's say. And that's what causes an alt season when you get more people getting more ballsy in the space, basically. And that oscillates. It's a micro cycle within a macro cycle. But that's where the real big bucks are made here.
Amazing. Neel, well, listen, thank you as ever for your wisdom. We like to keep these lives powerful, impactful, and punchy, and as value dense as possible. And therefore, we like to keep them to around the 20-25 minute mark. So you know what? That was a really, really, really beautiful way to round off this live tonight. This short, fast, super sharp introduction to the crypto space. Obviously, as the crypto space continues to develop and this bull run continues to develop as well, it'll be very, very, very fun to do more lives along these lines, which can act as a commentary for the crypto bull run. Let's hope we get a juicy one, just like every other year. Of course, as you say, it's a little bit unusual already, is this bull run?
It is, yeah.
Happened sooner than the halvening. Yeah. So let's just see what's this space, I guess, really on this front. Predictions in the short term, or is that even possible?
It's very difficult to. I mean, we're seeing a pullback at the moment, which is, as we discussed briefly earlier, it's healthy. We don't want the market to go too bananas too quickly. Obviously, everyone knows the halving now, and as we get more people more informed in the space, it means that the cycles likely are going to be faster and shorter. But it's less sustainable. We want to see a longer cycle where, as we were joking earlier, you can kind of get some sleep and you're not checking your phone every hour.
Hell yeah. Or set those trade alerts up. That's what I used to do.
That's it.
Yeah, set those down trade alerts up, but not on the flipping exchange, because your stop loss is going to get triggered. Or that's what always happened to me anyway. But listen, this is the thing. You can talk about the theory and the philosophy of the space, and then there's actually quite a lot to know when it comes to executing the technical side of things. Cold wallets, hot wallets, do you keep it on exchange, limit order, market order, setting up a decentralized wallet versus a centralized wallet, all sorts of things. There's all sorts of cool stuff, all sorts of fun stuff. And that's why I'm sure there's absolutely loads more we can talk about on these lives. Neel, we're going to go ahead and wrap up roundabout there. Anything that you'd like to say in conclusion?
No, that's perfect, mate. Yeah, we've covered from a sort of broad perspective most of the, I guess, the thesis for why people get involved in the first place, and covered, I guess, why there is the value in investing here. But I think the number one thing I would say is do your research. A lot of people blindly sort of enter these markets, don't really have a mature time frame, as we alluded to earlier, and get burnt, unfortunately, because they're not used to the volatility. They're not used to the emotional swings that this market can bring. So yeah, if you're going to dip your toe in and you've never invested in crypto before, get reading, get researching. There's a lot of resources out there. I know, obviously, James, you've got your education that you offer, which is pretty comprehensive as well. And yeah, if you're gonna get involved, yeah, get sort of read up first beforehand, because otherwise you're swimming in a shark infested waters.
Do you know what? You've actually just made a brilliant point just then, because when I look back on my journey, I actually did things the wrong way around. I was like, right, let me learn about crypto. And then I was like, okay, this isn't going so well. Let me just go right back to the basics, to the fundamentals. And whenever I learned how money worked,
That's it.
crypto made so much more sense to me. I was like, oh my God, it's just intuitive that's the evolution, because crypto is crazy. If you think crypto is crazy, actual money is just as crazy, if not crazier.
Isn't it,
Given
mate?
that
Yeah.
given that we use it every day.
Yeah, it is crazy. Yeah, I think yeah, when you fully understand that and you understand the thesis behind it, and what we've normalized as the financial system and the banking system, it really sort of galvanizes your conviction in investments in the space, and it helps you to invest more responsibly in the space, really, and not get so emotional about the volatility.
Going to leave everybody with a book, and that book is The Creature from Jekyll Island. It is quite dense. It's like 500 pages. I defy anybody to read that and then to not see the world and world history in a completely different way. It's all about the Bank of England and its origins, and also the Federal Reserve and its origins as well. It was originally conceived by a group of bankers and ultra high level American aristocrats on a little island called Jekyll Island, and that's where the name comes from, which is really cool. Fun fact for everybody. All right, guys. Well, anyway, listen, we're going to go ahead and wrap up right now. I'm going to leave everybody with this beautiful shot of the city of Riyadh, which is where I presently am this evening. I don't know how much you can see of that past my head, but yeah. Anyway, super fun live tonight, Neel. I'm already looking forward to the next one, my friend. Hope you have an absolutely smashing evening, and we shall speak soon.
Cheers, brother. Take care of yourself.